Hello and a warm welcome to this week's video update. My name's Scott and this is edition number 15 now of our weekly updates on the energy markets. So as always, I'm going to go through the price changes week to week and then go through what's been driving the markets over the last week. Firstly, if we look at gas prices, unfortunately, once again, I'm having to say prices have gone up for another week. We're seeing prices go up much more on longer term dated contracts. So we've seen anywhere between around 5.7 on your 3-year deal to as low as 2.1% on your 12-month typical deal. So another bullish week in the markets. Prices have gone higher and I'll get on to why. We are seeing signs that the market is starting to settle in recent days. So it'll be interesting to see what occurs this week regarding that. Power prices have gone up as well, and just like the last few weeks, it's a much more bullish pattern in the way it's going up. So we're seeing higher substantial price rises, anywhere between 7.8 to 8.2%. Interestingly, the 24-month period has risen the most over the last week at 8.2%. And as you can see from the graph there, the power graph is a much more sustained, consistent upward trend compared to gas, which is a little bit more volatile. So let's run through the key events last week. I'm going to start with some good news before I get on to some of the more bullish news. So firstly, EU gas storage did pass 70% last week. Where it's at 70% and we're now in August, it does give a lot of confidence that we should hit the mandate target of 80% by November. We have 3 months to go still for storage injections, and it is worth noting that the replenishment rate is expected to be much slower with everything going on with Nord Stream 1 and other gas supply sources. But with that kind of timeline still ahead of us, it should definitely be achievable to hit 80%. That is anything unforeseen doesn't happen between now and then. So that is some good news, and the market is paying some attention to that, but perhaps once it hits that 80% mark, it will pay more attention to that in terms of a bearish signal. In terms of the main kind of news right now is the turbine saga. There has been no real progress between Siemens and Russia on this. So it's quite hard to source what is true and what's not from various different news outlets and sources. But what I understand is the turbine's still stuck in Germany. Russia can't accept delivery of this due to sanctions and paperwork issues. So as it is, it's as it was last week, with the turbine still kind of in limbo in Germany and no real progress being made there. And finally, one thing which was bearish was oil dropping well below $100. So I believe at the time of recording, it's around $94 now a barrel of Brent, that is. We've seen in recent weeks oil as high as $120, so we have seen that come down quite substantially. Reason being is mainly recession fears. Recession brings lower economic output, which in turn lowers fuel demand. So we are seeing oil prices move lower because of that, but there are a couple other reasons. So OPEC are increasing production by 100,000 barrels a day from September. And there was an unexpected build-up in US inventory stock as well. So all of this kind of came together in a short space of time to drop oil much lower than it has been. So where we go from here in terms of oil prices, there's mixed kind of picture and viewpoints, but that's definitely a bearish signal, but it hasn't had much impact in power and gas prices in all honesty. Looking ahead for this week, I've picked out a few things to talk about. Firstly, the heat waves are back. We went through a long sustained record-breaking heat wave in July. And though this one is not expected to be record-breaking, we are going to see temperatures, certainly in the south, well into the 30s, mid-30s or higher. Towards the end of the week, it will get progressively hotter. Once again, this is going to strain the national grid. It's going to put a strain on energy and power usage with cooling demand, and that's probably going to be bullish on prices. Though the markets have open settled this week, it does give a risk that short-term supply might be squeezed at time, as we saw during last month's heat wave. Some good news is LNG. Much more LNG is on the way. Initially, we had around 3 cargoes booked in. That then jumped to 5, and it's now 6. And it could be that we get around 10 for the whole month, which is still lower than it has been at the start of the year, but for a summer season, and given the situation at Freeport, 10 would be a much better number than was predicted. And that may come at a good time, not just because of the heat wave, but because there's a busy maintenance schedule right now disrupting other sources of gas. So that could be bearish on prices. And then, as I just mentioned, maintenance work is continuing on the UK continental shelf and Norway. So this is still going to be an ongoing thing for the next month or so, as it's kind of peak maintenance season. So we are expecting supply to be intermittent and disrupted at times, which could play a big part in the day ahead market. If you'd like further information, we always upload our daily market report every day on our website, and we have a new monthly market edition coming out soon, hopefully this week, which you'll be able to view on the website as well. As well as that, we have the Market Watch Live team, which are available to chat to between 10 and 12, Monday to Friday. So thank you for watching, and I look forward to seeing you on the next edition next week. Thank you very much.